We are nowhere near a peak, so I think we're in phase 2.
Do you think that's because investors just don't believe this bull run is sustainable?
All the equities are underperforming the move in silver. Silver's up 300% in a year, yet the equities on average are only up 200%. That's not normal. For anybody who feel like they've missed the move in silver, the equities are trading as if the price was sub $40.
We're at the Vancouver Resource Investment Conference, and here with me is Shawn Khunkhun, CEO of Dolly Varden Silver. Shawn, we had you on the show not too long ago. You were announcing the proposed merger between Dolly Varden and Contango, or Rick Van Nieuwenhuizen was on the show. Unfortunately, he couldn't join us in the panel today, but we miss him. We miss you, Rick. Shawn, welcome back to the show. It's good to see you. Congratulations on the entire silver industry reaching $100 an ounce. It must be huge for producers, must be huge for developers like yourself as well, and I know you're transitioning with this merger into a producer yourself. So my first question is, what made you right? Because you were on the show with me a lot over the last year and a half. You were calling for $75 silver, 77, and then not only did it hit that target in a span of just a month and a half, it surpassed that and then some, and now triple-digit silver, which a lot of people have been waiting for 40 years. So before we get your reaction to what's happened to the silver market and what's next, just answer for us, what made your call correct? What do you think went right?
Okay, so that call, it's been building for years.
Yeah.
You know, with the deficits, with the annual deficits. You know, we're consuming more than the market can supply, right? So it's really simple. And we've been in deficit for over 5 years, and now the price is reacting. And I think what specifically is taking it there is momentum. Right? You know, once you broke 50, which was the old historic high, there was no overhead resistance. And so we met first week of September. Silver had just broken $40 for the first time in 13 years. And here we are at $103 an ounce. I think what's driving silver is the fundamentals. Okay? Industry needs it. It's critical. There's no substitute for silver. And at the same time, as gold soars to $5,000 an ounce, the monetary crowd, those who are concerned about systemic risk, they want a hedge against inflation, those who are outpriced from gold are now turning to silver. Now, there's some specific things that have contributed, like India considering bringing in silver to the banking system as collateral the same way they use gold. The fact that China and the U.S. have named silver a critical mineral. So there's been some specific things, but I think this has been building for years. And now you've got the breakout, the momentum, and now you have the speculators piling on and looking to get exposure to a very tight market.
There's a few events that happened in the last month and a half. So December 31st, New Year, China restricted the export of silver. And that was a continuation of their exports of critical minerals, which they began in late 2024, early 2025, with other critical minerals needed for the production of ammunition, for example. That was one event. And then, like you mentioned, gold soaring to $5,000 an ounce may have contributed to silver's rise. Geopolitical tensions have risen dramatically in the last month following Maduro's capture in Venezuela, to then threats of Greenland getting captured, and then threats of NATO being disbanded. Which of these events that I've listed were, I would say, significant contributors to silver's rise, or not so much?
Look, I think it's as simple as investors want their metal. Like physical ownership, physical delivery. You know, there is a lack of confidence, right? There's a lack of confidence in currencies, and there's a lack of confidence in the idea that you have this metal. If you don't have it physically, you know, we've been in this world where through whether it's the threat of tariffs, or it's by bringing countries out of the banking system, restricting them from the SWIFT system, the world is reacting. And the reaction is getting away from dollars, the US dollar, and moving into alternatives. And it's a basket of alternatives, including silver.
What's next after $100?
Well, look, I look at ratios. And right now, we're roughly at about a 48-to-1 silver to gold ratio. You know, when I started this business, Dolly Varden, the ratio was 125-to-1. You know, historically, that ratio has been 15-to-1, right? If we had 15-to-1, David, today, we'd have $333 silver. So what's next? Higher prices. But again, you know, when I was last on with you, I was calling for $77 silver, and here we are at 103. I always like to be conservative. You know, can a pullback happen? You know, my biggest concern is investors. I don't want investors to get hurt. I also don't want them to miss the move. So if you're already an investor in silver, you know, maybe now's the moment to sit back and enjoy the fact that your metal has appreciated. For those who don't own it, consider dollar cost averaging in over the next coming quarters.
Does the recent move in silver incentivize you to expedite your timeline towards production?
You know, when silver broke $25 in April, and that move felt like a sustained move, I went out and I made big acquisitions. I significantly increased our land package. I went out and I bought 3 more past-producing high-grade silver mines. I raised a lot of money. I did a big drill program. And then, as the price soared from 40 to 50 to 70, we announced the merger. And this merger is going to enable us to move from exploration company into developer and into production. So now I'm incentivized to develop my silver.
Yeah. The fact that you announced a merger in December, and the fact that, well, that first of all, that coincides with, I would say, more M&A picking up in the industry overall. It wasn't just your company. At Beaver Creek a couple months ago, there was a Tech and Anglo merger. But that aside, investors are looking at M&A as a cue for the top. And just a couple of minutes ago, before you came on the chair, Shawn, a few people came up to me and indicated that this may be a top for them. Maybe it was a Freudian slip in just speech, but I think investors look at M&A as an indicator for topping signals, because that's exactly what happened in 2011. A lot of deals were done in a very short amount of time, and the price of gold and silver fell shortly after. What's different this time, if anything?
Well, listen, I think that every bull market is the same, okay? It starts with a nobody believes phase. Okay, that's stage 1. Nobody believes. Stage 2 is this is for real? Question mark.
Okay.
So the first stage, you've got some skeptical optimism. Phase 2, you have more confidence. And stage 3 is everybody's a genius.
Yeah.
Now, there is a lot of confidence around this conference, and there are a lot of people that are, as Rick Rule talks about,
sure,
you know, misguiding brains with a bull market. But if you look at some indicators, if you look at some valuations, okay, if you take a look at, for example, the Venture Exchange, which is around 1,000 points. This was an exchange that was up over 2,500 points in 2011. In 2007, it was over 3,300 points. So if you look at what signifies a peak, it's a peak in earnings, okay? Now, we haven't seen Q4 numbers. So the market right now is pricing in $3,000 gold and $35 silver. So we can't be at a top because the companies are trading as if the metal prices are a lot lower. So we are nowhere near a peak. So I think we're in phase 2.
Do you think that's because investors just don't believe this bull run is sustainable?
I think that's part of it. Like, let's study the last few years.
Yeah.
Okay. So gold breaks 1,300 in 2019. For a lot of the same reasons silver's breaking out today.
Right.
So, some changes in how gold was going to be treated within the banking system. And back then, gold was only valued, before Basel III, only if you had an ounce of gold, you were only getting credit for 50% of that value. Now it's 100%. gold breaks out of a 6-year range. It was range bound, and it goes and it runs through 1,300 to 1,900, and we've subsequently seen it now go to 5,000. The stocks didn't move right away, and historically stocks lag the metal price, and investors need to see quarter after quarter of sustained prices before they factor that in to the riskier equities. So I think this is very healthy, this is very normal, and it tells me that we have a long way to go before the end of this bull run.
If an investor were to say to you, Shawn, I would like assurances that Dolly Varden isn't overextending itself in this bull run, because we don't know where the price of silver is going to go next month. It could be 150, it could be back down to 50, which, by the way, would still be higher than it was a year ago by a considerable margin. We just don't want your company or any company in the sector to be making a lot of mistakes with M&A and overspending, overextending, over-acquiring. How would you respond to that?
You know, the biggest challenge the Dolly Varden shareholder had, or the biggest question that I used to face was, now what?
Right.
Like, you just keep drilling and you keep drilling and you keep drilling and you keep finding more. That's wonderful. But how are you going to move from discovery to development into production? Like, when are we going to actually make money? And what we've done is, through this merger, Dolly Varden is acquiring the richest open pit gold mine on planet Earth. We've got an 8 gram per ton open pit gold mine in Alaska, so it's in a safe jurisdiction. That gold mine is generating, on average, in US dollars, $100 million a year of cash flow. And with the merged entity, Contango Ore and Dolly Varden merger, so Contango Silver and Gold, which will be the new company, is going to have $100 million in the bank, cash, USD, $100 million of cash flow. And so what we're getting stronger, we're getting exposure to a technical team that knows how to move a project forward. And so we're getting stronger. We're not taking on more risk. We're giving our investors exposure to more upside. And we've laid out a path to now move into development.
Okay. And going back to what you were saying earlier about industries wanting silver, are you concerned about the exact opposite scenario right now, where the industries that needed silver no longer want silver at $100 plus? Aren't they thinking of ways to thrift silver and use alternatives?
So there was a very big investment announced by Samsung, where they're going to start manufacturing the solid state battery. That type of investment is a commitment that's going to go on for that production for decades. So this isn't something that you can just turn off and turn on. And so silver is getting consumed at an even greater rate industrially. We're going from 100 years ago, the industrial part of silver was 10%. Most of silver was consumed for investment purposes. We're now at 55%. So outside of EVs, you've got solar, which is growing. You've got the military use. And so I don't see, when you look at an electric vehicle priced at over $50,000, whether silver is 135 or 100 doesn't have a huge impact on the purchase price of that vehicle.
I don't know if this is happening already, but at some point Samsung and companies like Samsung are probably going to approach companies like yourself and say, look, we don't like $100 silver. We don't like even $80 silver. What can you do as an industry to expedite the production of silver such that the price normalizes back down to where it was last year?
The biggest challenge with silver, unlike any other metal, is 75% of it gets consumed or produced as a byproduct. So the challenge that we face is more silver will get produced once the price of other metals go up. Metals like lead, metals like zinc, metals like copper, gold included. And so really, with only 25% of silver coming from primary silver mines, you can incentivize those primary silver producers. But that's the challenge, and that's why I am so bullish on silver. I've been adamant for people to go out and get as much silver as they could when the price was $16, $20, $30, $40. Now what I'm saying is go buy the miners. Because the miners, for anybody who feel like they've missed the move in silver, the equities are trading as if the price was sub $40.
When I first started interviewing you about 2 years, year and a half ago, silver was sub $30. I remember because we were all talking about when silver was hitting that $30 target. How has the conversations between yourself and your investors shifted in the last year and a half between $30 silver and now? What were some of their concerns and questions to you back then? What are some of the concerns and questions to you now?
You know, the reality, David, is it's happened so quickly.
Yeah.
I haven't had enough of those conversations.
Okay.
Right? And, I think investors who have been here, who have been, punished through a sustained bear market, are relieved that it's finally happening. Now, what I noticed in November, as the price was starting to go from 40 to 50, new entries and new participants came into the marketplace. So this is new money, new funds. Funds are growing very quickly. And so those are new conversations. And so it's happened so quickly, it's hard for me to really comment on it.
Let me just pull up a price chart of your company. We can show that to the audience as well. So the investors like miners because they want leverage to the price of silver. And I'm just going to pull up Dolly Varden here. How would you maintain this leverage even at $100 silver? So year to date, you're up between $6.47 to $7.86. And that's just in the last 30 days. In the last year, 1 year, Dolly Varden is up from about $4.36 a share to, $7.86, almost $8. So that's nearly double. That's in line with how silver has grown over the last year and a half, probably a bit more. But the question is, what can Dolly Varden do to maintain leverage?
So Dolly Varden can do a lot.
Yeah.
But what I want to point out is if we study previous cycles, and if you look at some of the great silver companies, Pan American Silver, Wheaton Precious Metals, what you'll have found was in those previous cycles, one of those equities would be up 1,500% with a 300% move in silver.
Right.
So what I'm saying is Dolly and all the equities are underperforming the move in silver. Silver's up 300% in a year, yet the equities on average are only up 200%. That's not normal. And so what will happen as the market, analysts, Bay Street, Wall Street, starts pricing in today's price versus Q3's price, you're going to see those equities move, and they're going to move quickly. Dolly's gone, like you said, from $6 to $8 in a very short period of time, and that catch-up is happening all over the mining space.
Well, is there a fundamental shift in your strategy now that silver's at $100 versus when it was at sub 40, which is just a couple months ago when I saw you in Colorado?
So look, people were pressuring me, shareholders, advisors, get into production when the price was $20.
Yeah.
And I said, no, it's the time to go out and acquire and explore and grow. These prices are now incentivizing me to develop and to build. And so that's a change in strategy. But the one thing I just want to highlight is I want to adhere to a very high-grade project. I want to adhere to all the principles that are important to me. Safe jurisdiction. And so it's time to now move from explorer to developer and get into production, but it doesn't change my view on grade or jurisdiction.
Probably the number one concern that investors have had that they've told me when looking at a company like yours transitioning from a developer to a producer is shareholder dilution as you fund your CapEx. How would you address that?
This is why I did the merger. It's a great question. So if I was faced with, for most mining projects, your builds are in $500, $600, $700 million, if not $1 billion. And it takes a long time, often a decade. So by merging with a cash flow entity, it minimizes dilution. But also, the other point in this merger is our merger partner employs a model called DSO, direct shipping of ore. And so what that means, David, is if you focus on high-grade projects, you can put rocks in a box and you can ship them to a processing facility. That's going to save you hundreds of millions of dollars of CapEx. It's going to save you permitting time, and it's just going to move you faster into production.
Okay. Can you give us some updates on your merger with Contango?
Yeah, so we're looking to have a meeting for the merger for our shareholders to vote. We've already got voter support agreements in place and a lot of enthusiasm and support for the merger. So we will vote on the merger in March. We will complete it in March. And the companies are individually continuing to put out developments.
Yes.
Production developments, discovery news. So both companies have had some very positive drill results and some positive production updates recently.
Okay. Well, Shawn, congrats again on not just the silver price reaching $100 and being right, by the way, but also on recent Dolly Varden updates. And good luck with your merger. We'll speak again soon.
Thank you so much. Good to see you, David.
Coming on the show, and thank you for watching. Don't forget to follow Dolly Varden, links down below. Follow Shawn Khunkhun as well. And we'll speak more with Shawn later in the year. Take care for now.